Hey traders, John Howell here. Let's have a look at what happened with the markets today, especially when it comes to the mining sector. Mining sector, you can see mining sector actually down 2%, 2%, 2%. Silver and gold got hit a little bit as well too, about a 1%. So I want to share that with you as well too. Also I want to share with you a trade that happened with gold intraday charts yesterday for me, and also I want to teach you a trading pattern that tells you when the momentum of a particular move is slowing down and why it's a warning not to get involved with a opportunity at that time. I'm going to share that with you here to really help you out. So let's get straight into it. Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's start off with the stock market here first, and because I've got a few things obviously that I want to share with you. So starting off with the good old stock market. Stock market obviously getting towards the end of the year for that. Let me see if I can just bring this up there. There we go. There we go. That's a bit better, eh? Yeah, so we could see that we just the last few days, pretty much nothing going on for the last few days, as you can see. And you can see how that we've just been continuing going up. We had a little bit of a drop to the downside, and then now we're having this bit of a push to the upside. I do believe we're going to have a weak start to the. I believe we're going to have a weak start towards the start of 2024, right? Which is a couple of days now from doing this video. And I do believe we're going to have a weak start. And the reason why I'm saying that is because if we have a look at what the market is doing, we've just been on a terror to the upside, and it's just really starting to push it into that extreme levels of what this market is, is all about. And then remember, guys, when people are fearful, be greedy. When people are greedy, be fearful, right? And look at this fear and greed index. We're now at extreme greed. Once again, it's 77. Lucky number 77 for you traders. So as you can see through there, you can see that we've got this whole 77 point through here. And you can see if we have this timeline through here, we can see that we're still back up towards this extreme greed. So why is that important? It's important because whenever we do get towards these extreme levels, which is one, we get too far away from the moving average. You can see how that whenever we get too far away from the moving average, you can see that we now become what's called overbought or oversold. Oversold down, overbought up. And once we can see that, it just tells us I shouldn't be getting involved with this market right now because trading is all about probability, right? We just want to be able to stack the odds on our side of having a successful trading career, right? That's what trading is all about. It's not about trying to capture the last little move. It's just like, I want to have a probability of me having a successful trading career, right? Not just, I don't want to be lucky once in a while. I want to have a good foundation. That's the reason why I like with my trading strategy, guys. I like to trade a strategy that I know I can rely on. That's going to give me that I can rely on for the rest of my life, right? And that's obviously what I do with my own trading. I'm using a set of rules. And one of my rules is that I always like to get into trades when the market is close to the 52 moving average. Now, why is that? Because if it's too far up, we're now overbought. If we're too far down, we're oversold. And we're probably likely to come back towards the moving average. So the best trades for me are when we get closer towards the moving average, because it tells me that we've now had this sort of pullback or a balancing of now the overbought. Now we're back to sort of balancing equilibrium, and now we're getting ready to go again. That's obviously just one rule in my system, guys, but I'm teaching you this one rule because it tells me, just like now, we're getting pretty much overbought right now, and it doesn't mean we can't keep going up to the upside, but we are definitely in the overbought territory through here. If we go to the Dow Jones, and once again, we had this little drop to the downside, and then now we're having this one little push to the upside. I do believe that we're going to start 2024 on a negative note from here. And look how far we are. Firstly, look how vertical this move is. If I squeeze my charts up, there is not one time, even through the COVID boom, that did we actually have this whole move to the upside when it comes to the actual stock market. So that's what I'm seeing through there, traders. Again, we're too far in this move. We need to have some sort of a sideways phase because the market's I use the market like an energy field, right? People like say, John, it's not an energy field, it's more like currency. Whenever I say energy field, guys, I'm using simple analogies to try to get you guys to understand and try to educate you, to try to help you out, that the market's like an energy field, right? And whenever we go up for a while, it's used a lot of energy. Now we just need to go sideways for a while to what? To just refuel, right? Refuel, reset. We've now gone up. We've actually had a lot of energy to push this to the upside. And when it's going, guess what? Then now we actually get this pullback towards these levels through here. So that's actually what I'm seeing through there. You want to make sure you want to get that pullback. Or you might want to make sure that you're trading. You don't want to be trading after it's actually been going up for quite some time, because we're likely to get this drop through here. And I'll show you something real soon when it comes to that, about identifying when the market is actually starting to slow down and we're likely to turn around. I'll share a pattern with you that happened on the Forex market that I was trading yesterday from there. Let's go look at the actual gold and silver right now. So gold, this is actually, look at this here. Gold actually hit this level through here and we actually came back down. There was a short-term trade on a 5-minute chart on gold, and I'll get to that in just a minute for me by looking at it. But you can see here we actually had this short-term little pullback through here. But the big picture here, the big picture for me is not this one down day. It's like, oh my goodness, it's an engulfing candle. The big picture for me is very simple trend analysis. And we can see we had a low, higher low. Look what happened here. It came back, created another high low. Now we push to the upside. So there is actually nothing wrong with what's going on. Nothing wrong with what's going on through here. We may get a bit of a pullback, but look what's happening, right? It's squeezing up. It's absolutely squeezing up through here. And this look at that there. Look at that. Oh my goodness! Like this thing is squeezing up, and we're about to see a significant move. I really truly believe that. On through the gold, silver market. Silver market is all about what? Low, higher low, higher low. But the silver market is not really trending, right? We have this major resistance up here, and you can see it ran back up to that resistance level and hit it. We're back down towards this level here. We are getting a bit of a compression. Right, bit of a pressure to the upside through here. So I would say, yeah, we possibly could be developing something similar to like what gold's doing, but gold is on the verge of making some big moves. Anyway, that's what I do see. So we can see what's going on through there, right? Look at this here. Pressure, and then now we're sort of squeezing up through here. So very similar to gold through there. But if the big picture for silver is, check this out. The big picture for silver is this, right? Look what's been happening through here. We've been doing what? Absolutely nothing. And whenever we do these absolutely nothing for quite a bit of, look at this here, absolutely nothing for a bit of time, and then we had a nice move down for a while. Nothing for a period of time, and then a nice move up for a while. So whenever we do get these periods of nothing going on, we tend to break out and go for big moves in the markets from there. And that's the reason why that's exciting, because if we can start to really get a break above this level here, the $26 level, then that's going to be quite amazing when it comes to down to that level through there. So that's what I wanted to share with you there, guys. Let me get onto the gold market here. I want to share with you. This is what I just walked through there, traders, was more like just the daily charts. Okay, the big one for me that I'm really watching for. Oh, I didn't actually get into the mining sector. Let me quickly talk about the mining sector here. Mining sector, a bit of a sell-off through here. But we can see we're still making what? We're still making these higher lows, aren't we? So what is a high? If the market's making higher lows, who's in control? The buyers, right? Why? Because we're in an upward trend. Higher low, higher low. So even though we have a bit of a pullback, the market is still in an upward trend. So as long as this market doesn't break below the $29 level, this could just be another little bit of a pullback before we get going again. And if we break that level, there's this double top up here that we could be also seeing activated as well too, or activated also hit. So we get a bit of a pullback, maybe breakout, just like gold could possibly be getting ready to do. And then away we go again when it comes to that as well. So that's what I'm seeing through there, guys. Let's actually, now again, what I just walked you through there, traders, was more like just an update on the actual market. Now I want to talk to you about some trading opportunities that you can start to look for, okay? Now, so for me personally, I have my trading system that I follow, right? And I'm looking for certain trading setups in the markets. But there's also what's called advanced type of trading as well too. So sometimes what you will see, and I noticed this is what's called like a reversal flag setup. Now let me explain what I mean here. Okay, so I'm going to go into. Is it okay if I go into teaching mode here? Can I teach you this pattern? All right, fantastic. So if the market goes, let's just say the market goes up and develops what? A flag. And it does this. Starts to do this through here. Okay. So and this is where it's actually quite amazing, right? So in this scenario here, what are a lot of people thinking? Right? A lot of people thinking, oh, this is a bull flag. It's definitely going to go up, which is wrong, right? Which is wrong to think that, because we just never know where it's going to break. I always say to my traders, wait for the break first, right? So I do like the flag setup, but I like to apply moving averages, and I like to apply what's called a higher time frame analysis as well to make sure I'm getting in at the perfect opportunity for that. So looking at this level here, right, and then looking at this whole period through here, what are we seeing? We're seeing this market go sideways, right? So if we do have a look at this whole point through here, we're actually expecting the market to do this, aren't we? I've actually seen many times, and this is actually what happened with gold yesterday, right? We actually got a break down like this. Now, what does that mean? Generally what that means, and again, depending on where we are in the markets of an overall picture, but generally that means is that that this bullish flag is no longer bullish. This down bar break down, not up, is a shock to people. And then we generally end up coming back down to where the flag started. We end up doing something like this, coming back down to where the flag started. Makes sense? So a lot of people were expecting to see a break out to the upside, but we didn't get that. And because we didn't, and again, we always wait for the breakout, right? We wait for confirmation that the flag is going to be a flag. But in this time, it actually broke down. Most people weren't expecting that. And this is actually something that I've actually learned just from studying the markets. I haven't learned this from an actual textbook. It's called like a bullish flag, but it's a bearish trade from a bullish flag. It's quite oxymoron. I know it sounds like it's a bearish trade from a bullish setup. It's like, but this is just the way it goes, right? And I've only learned this from really trading the markets a lot, over my last 20 years of trading the markets here. So the purpose of me bringing that up is that if I go show you gold now on the 5-minute, you will be able to identify what I'm actually talking about here, right? Look at this back here. Now, remember I said before, right? I walked you through that there. So I was actually trading gold. This was yesterday afternoon for me, my time. And look at this here. So what do we have? We have what? We have a move to the upside. There's that there. And we have what? A bit of a flag formation, don't we? Bit of a flag formation. But did it break? Did this flag formation here overall, did it break to the upside? No. What happened? See how we actually got a strong break to the downside? Now, remember I said before, whenever we do get this pattern here, we have a real good probability of coming back down to where the overall flag started. So that was the trading setup there, right? In there, and then wrote it down, and then and I just simply just managed the stop as it came down through there. So this is one setup, traders, that a lot of people just don't know about, because they say, okay, it's a bullish flag, so therefore it's bullish. Therefore, I'm looking for a bullish trade. And a lot of people, one, they get in early and then the market does that on them. But secondly, when the market does go down, they don't know what to do because they haven't seen it before, or that because it's such a hard thing to think about. Like, this is a bullish flag, but it's a bearish trade off a bullish flag. Again, this is more like an experienced type of setup if you haven't been trading for a while. But this is something that does happen, and when it does happen, there's also some really good opportunities to take it. And then there's a real high probability we're going to get down towards to at least where the actual flag started, because it's actually, this is what's more like a bullish flag, but it's a failed. And remember, what we want to see is we want to see a break out first to say this bullish flag is likely to continue. I then also like to see moving averages behind that. Makes sense, traders? Again, you can rewind this video if you want to actually see that part again. But this is actually quite a powerful setup for me. Now, the last thing I want to share with you in today's update is I was looking, because for me traders, I trade the last half an hour of the US stock market, right? And I actually have scans that I run, and let me actually just show you this here. So there's these actual scans. Here's one scan, but then I also have 4 different scans because it's very, very light volume. There's actually nothing happening much on the actual scans today. But this is the scans that I actually run every day. Because it's very light volume, there's actually not a lot going on. But it helps me identify the trading opportunities for me, right? So I do half an hour towards the end of that, and that's what I actually like to trade when it comes to that. So, and again, because of my scans, I actually scan because my scanner that I'm actually using to find these trades for me, I'm scanning the top 1,000 stocks, right? So the high cut 1,000 stocks, but I can scan the S&P 500. I can scan the US stocks. I can scan just gold stocks if I want to. I can scan all ETFs if I wanted to. I could scan just the Forex market if I wanted to, right? So this is what I do. But when it comes to the stock market, guys, when it comes to that, where I'm trying to get in today and hold it for sometimes for a week or two or sometimes longer, I'm using this scan here. And again, it's not much coming on the scan today, which is good, right? Because instead of me going through 1,000 stocks manually to find out that there's no trades today, guess what? I only can see that there was this one opportunity here, which wasn't a trade for me because it didn't actually meet my rules. So the reason why I'm saying that, bringing that up to you, is that that's how I actually trade the stock market, because I use the scanner to help me find the trades. And then I trade for a couple of hours in the afternoon, and I'm looking at the indices, S&P 500, Dow, Nasdaq, Russell, stuff like that. I'm also looking at some of the Forex pairs as well too, right? AUD, USD. Let me just show you the pairs that I like to look at as well too, right? So this is actually TradingView. I don't trade from TradingView. I trade from my actual Forex and futures platform, which allows crypto market and so on and so forth as well too. But I trade the Euro USD, Great British Pound, USD JPY, AUD. Okay, I trade those as well too. Plus also because I trade the futures, the Forex market, but then also I have things like gold and also oil up as well too. Now I have big screens, right? I have a really big, almost like 50 inch, I think it's a 50-inch TV and a massive widescreen, so I can have all these markets on the screen all at one time to see what's going on from that as well too. So it's not like I'm flicking between charts. I have them all up. I have them all up, and then I can actually I have all the time frames laid out that I want to look at, especially when I'm trading the intraday charts in the afternoon. Now, the purpose of me telling you this is that if you remember, if you guys have been with me for a while, you probably remember the roller coaster pattern, right? I call it the roller coaster pattern. Now, why do I call it the roller coaster pattern? I call it the roller coaster pattern because it's actually like a roller coaster, and this is actually where an example of, I was actually looking for a shorting opportunity from this, and I'll share that with you in just a minute. But then also it's an alert to a warning that, hey, this is actually slowing down. The momentum in this move is slowing down. So trying to capture a trade here is very, 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 very risky. And this is where they suck you in. So I'll call it the roller coaster pattern, because what does the roller coaster do, right? The roller coaster, it goes up, 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 up. It just stays going up, up, up. And then it starts to slow down, right? It starts to slow down a little bit, and then it drops, and then it comes off the cliff, right? So this is what's called the roller coaster pattern. And so you'll notice that if this is the stock, if this is the market at that time, we have a very strong move up. Oh my goodness, look. And this here might be, we might have nice, good upward trend, higher lows, higher highs, very strong trend. And then we might start to do something like this through here. Makes sense? So the blue might be the market, and the black is more like an average of what the market's doing. And then we can see that through there, right? And then what happens is we end up slowing down through here. And this is where there's a danger, because a lot of traders can, if we get a breakout through here, that's going to be a false breakout, because the market has been slowing down. There's not a lot of strong momentum behind this move. I like to get in when the move's likely to be starting, or there's a lot of momentum pushing that there. This is the roller coaster pattern is actually slowing down from here, and then we're likely to come down. And I saw this trading the Great British Pound USD. So let me just bring this up through to here, and let me just see if I can just show you this pattern that I'm looking at here, right? So let me just bring this up through to here, and okay, cool. All right. So I'll use this chart to the left here, right? This is a 15-minute chart, by the way, guys. This is a 15-minute chart here, and the 15-minute chart has a 24 moving average on here. Okay, so I use the 24 moving average for these types of time frames, and then also use the 52 as well too. I won't get into the details of what I use through there, but it's more like whenever because if I'm looking at a 15-minute chart, then I'm looking at maybe a 5-minute chart, or a 2-minute chart for an entry. So I like to use the higher time frame, which is if I'm looking at a 5-minute chart, say through here, if I'm looking at this 5-minute chart here, then I'm trying to identify what's the overall picture telling me, I say on a 15-minute chart, okay? So I like to use this through here, in this moving average. Now, notice what the moving average, remember the black line that I drew just a minute ago? Notice what this moving average is doing right now. Right, the moving average is what? So the moving average see how it went strong through here? And then see how it started to flatten out through here? This is strong. This is a lot weaker. So we went from what? Strong to weak, and then look what happened. See how the roller coaster pattern, and then it started to just roll over, right? Why did that happen? Because we went from strong, and then look how weak that is to the upside. Once again, if this is market's going up strong, and then it just starts to, it still goes up, right? But it's slowing down. See how this is just it's going up, but very, very slowly going up, not strongly going up like this here. This is an alert and a warning sign that if you get any breakout, which we actually did through here, and if I go to my 5-minute chart now, and I'm going to bring up an arrow for you. Arrow, right? So this is an arrow right here. Right through there. As you can see now, let me just sink and lay out. So you can see this is the exact same. See how that's the exact same level. Now look what happened through here. This is the 15-minute chart here, right? And this is the 5-minute chart. Now if I zoom out through here, look what actually happened. It actually broke up, sucked people in, and if people did try to go long here, let me sink and lay out. Again, this is the 15-minute chart to the left and the 5-minute chart to the right, as you can see, right? So you can see here that because this overall picture was slowing down, is it okay if I go a bit advanced on you here, right? I'm just trying to help you guys. I want to make sure 2024 is a good year for you guys. So I'm trying to help you guys identify some patterns and some things trading is not only identifying good trades, like the gold trade, but it's also an understanding how to not get involved with something that's going to be a false breakout. In fact, how can you benefit from actually trading the other side? Which again, I didn't actually get a trade through here, so that was unfortunate, but I was watching it. But as you can see, look what happened through here, right? Why did this break up and then completely fail and then fall off a cliff? What was the warning sign that this breakout here was going to be a false breakout? And what was it? As you can see. And if you just use the moving average as that pattern that I talked about, what is it? It's the roller coaster pattern, right? It goes up, it starts to slow down, and then we start to get the roller coaster pattern through there. So I hope this helps you out there today, traders. So traders, if you do want to make sure that 2024 is a good year for you, then I am running a webinar today. On that webinar, I'm going to teach you the number one thing that I had to do to go from $250,000 in debt to then actually starting to make money from trading. I'm going to share with you more about my scanner and my screens and how I actually trade the Forex market and the stock market and stuff like that. I'm also going to teach you step by step my number one trading system that I look for. Today on the gold market, I taught you about an advanced type of pattern, but I'm going to teach you my number one trading pattern that I look for every single day. I'm just going to teach you for free so you can start to apply today. Plus also on that webinar that I'm running today to help you get started for 2024, I'm also going to be walking you through dozens and dozens and dozens of real examples on all different types of markets, Forex market, stock market, so you can start to not only get the theory of it, but you can see the real life examples. And the reason I'm doing that is so you can actually start to apply this to your trading today. So I'm running that webinar today, guys. That very first link in the description, or if you go to johnslivetraining.com, and then you'll be able to register for that. So I look forward to seeing you on the webinar there today, traders. Make sure you do rewind this as well too. Make sure you really study the roller coaster pattern, and then also make sure you study that bullish flag, but also a bearish setup from that there. Have a great day, traders.